Hey, everybody, welcome to another episode of the Nestro podcast. I'm super excited and I'm really excited that I do really mean it because this is the first ever show I've actually got for you, my good dear friend, TraderSZ, here aboard. This is going to be a little bit, I think, of a different show because, like I said, we never kind of got on any sort of like episode interview before together. So I cannot really hide my excitement for it. You're going to learn, guys, about traders SZ's overall market outlooks for 2022. We're going to discuss a little bit about Bitcoin, Ethereum, equities, perhaps for the overall indices, forex markets. We're going to talk about his trading styles, the challenges that he's recently gone through very successfully. This and more, guys. And if you are ready, make sure you actually have a listen because the show is going to be amazing. So, brief introduction about Trader SZ from the way I know him. So we've been kind of just seeing each other on Twitter, I think, for quite a while, couple
Yeah.
years. It's been quite a chunk of a history. But I personally know that you're super extremely talented trader, very very sophisticated in your trading style, very consequent about it, and very successful. What is about Trader SZ that I haven't mentioned yet? What's up?
I don't know, not much. I mean, I've been trading for 10 years now, full time. So I've been around. I mean, even then, I consider myself baby compared to some of the guys I work with or some of the guys I know. So 10 years, always developing. That's the key, I think. Always, it's never enough to just settle with okay, I think I've got it and that's, I'm not going to work on your edge. Markets always evolving, volatility here, there, always adjusting. So you got to be hungry for it constantly. It's got to be something that you really love, because only when you really love it is when you're willing to put the work in to evolve with the market. Right now, I'm just speaking, Bitcoin dropping. Sorry, I've got positions in, so I might get a bit distracted here and there.
Okay.
But yeah, that's about it. It's been mainly focused on price action. Um, um, More of a, I have a long term outlook, but that long term outlook, I play short term trades. I trade around my positions as well. It's a mix of styles, really. It's not just one specific thing. What you see me post publicly is just the tip of the iceberg. There's a lot of things I don't. Nobody's going to share everything they do. But yeah, I like sharing my thoughts, like doing streams, like you yourself. Yeah, I mean, if you've got any questions somehow about myself, that will come up as well. But yeah, I've been training for 10 years. Yeah, what else can I
Quite a
say?
while, quite a while.
Yeah.
Because I have opened, this very podcast with Trader Z, uh, and it kind of, but just not letting him speak openly about how 2022 has been treating him so far. So let's hear how 2022 has been for you going on so far.
I think it's been probably the best start to the year. I mean, January
Okay,
anyway. January, excuse me, I've got a bit of a cold.
sure.
January's probably been, it's one of those months where, with me, right, it's what I find is like a handful of trades make the bulk of the year for me. That's my style. The rest I find a grind here and there, up, down, up, down. But it's that handful. But to make it worth your while, it's knowing when to adjust your risk. So January started, I wasn't expecting that in January. Started off great, and that's when everything's lined up with my style and I have my edge fully flowing, then I put my foot on the gas. Because if I'm using same risk on everything, then it's not gonna be as great. I'll gotta maximize when I'm in the zone, and then when it's not in my zone, I just step back. Like when Wednesday, nothing on Wednesday. Could have taken along, but no, I just stick to my style. When things are optimal, I put my foot on the gas. When I'm not feeling right or market's not my way, I step back or lower my risk, and that's what I do. That's what I do.
Sounds
Accelerate,
good. Sounds
decelerate.
good.
That's it.
Yeah. Yeah, I got you. I got you. I mean, honestly, I think, within this very brief kind of just set of synthesis points, you actually made a very important point about stepping back when you think the time is not right, right?
Yeah.
And this is what I've noticed, of course. Of course, you know it very well from your followers as well, that people never know when to take a step back, right? They
Mm.
seem to always kind of keep pressing, pushing more and more instead of taking risk. Let's say some risk off approach, they take even more risk on aggressive, right? So they, instead of decreasing their risk exposure, the amount of capital they actually invested with, they keep pumping on the higher leverage, right, just to kind of compensate for the losses, make them feel better, and eventually make them overall self-destruct with it. But let's talk about a little bit of your recent trading challenges, right? Because we are talking about knowing when to take a step back, but we're also talking about, just like you said, knowing when to put your foot on the pedal gas, right?
Yeah.
So how has it been that you made it overall, like, just uh, this huge challenge, I think, completed very successfully, getting you close to 1
Yeah, and
million
to
in
be honest,
profit?
that wasn't really a challenge. I mean, it was I've had a kind of test new strategies all the time. So I'll put 10, 15, 20K in, and I'll just test different strategies out. It just so happened I caught it in a trending environment, and I mean, I wouldn't apply that risk on a normal account, no way. So can I replicate it? I don't know if I can replicate that. I doubt it. But it just everything
Mm,
lined up perfectly, and it's a more of a money management style. I do everything I normally do. I'm just aggressive with the money management, and crypto being crypto, you can
mm,
achieve stuff like that. It's so volatile, and when it moves, it just 30, 40% drops, and you capture that and you put your foot on the gas with your risk. I mean, that could have been blown up as well, by the way. I did take some
mm,
drawdowns in there, but that was luck. So it's not something I took. That it was supposed to be a joke. I play with when I posted with a mate, but people see that and say, "Oh, well, I can do that." So no, you can't. I don't know if I can do that again. It was just
mhm.
being really aggressive in my risk. I think it was in January I started it, beginning of January, January 4th of it. I can't remember the exact date.
Mm,
And and it was a trending environment. So my key points were just when I know my invalidation, I add risk. When I get a new violation, I add risk, and I have an ultimate target in mind. So I keep doing the same thing until my target gets hit. Now, along with that, you got to identify: am I in a trending environment or a range band? Because if you're in a range band, you can't do that. You got to come out again. I can't compound like I do in a trending. And I just so happened to catch a nice leg in the market, and I compounded like hell, and I got lucky. It literally is like that. That's it.
Got you,
So
got you.
it was a test. I was just money mind testing a new strategy out, maybe just something new. Always looking at new things. What can I do? Half the time I don't apply it to my main account, but I thought let me test it. I just blew up like that. I just got luck. I would say it was a lot of luck, but yeah, that was it. Sometimes you get lucky. That's trading, really, isn't it? Whether
Yeah, it is.
luck increases when you put hard work in. So
It
yeah,
is. Yeah, yeah. I'm personally finding it, very, um, very kind of like, mind blowing that there are so many people who would literally think that by just copy pasting the exact same move that you kind of like either post, on Twitter or whatever, you posted within your communities, uh, you cannot just copy paste it like the hell, right?
no,
Literally
definitely
put the same orders, right? This is not going to work the same way, right? Everybody has their own different kind of like emotional baggage. Everybody has their own different experience. For some people, because of their risk aversion kind of like profile, they are not there. Some people are more risk averse, and they would just quit the positions before perhaps they let it develop to start with. Versus when they see, for example, like Rockstar, trading Rockstar that you are on Twitter, just there, saying that well, you got a bit of luck. I think this kind of like triggers to some people because, uh, some people get triggered because the question pops up in their heads like, what does it mean? Like, am I not lucky enough? Right? What is it? What is the magic? What is the sauce? And I do believe that this kind of like comes from your experience, right? You're saying
yeah.
10 years of trading.
Yeah, I know is that if you have that gut feel, and that gut feel is I don't think it's really gut feel. It's that experience subconsciously playing its role. But yeah, I'm always quick change. If I'm wrong or if I feel something wrong, I'm quick to change. That moment of changing when you think things are going, that's when people struggle. But I've done it long enough to know, okay, in the long run it works when I do this. In the beginning I made all the mistakes everybody's making, but I think after a while, you gotta know when to step back. Know, okay, I'm wrong here. Cut it. I can always enter back in if I'm wrong, and it's gonna continue my way. Or if I'm wrong, then it's a good exit. So that's that.
Yeah.
That's the part where it helps you grow your equity curve, knowing when to step back and knowing when to press on.
Yeah. Regarding the equities, I think before we move to the next points, I think it's very important to mention, like as a one of the learning points for so many listeners and viewers out there, that so many people forget that very important point of your portfolio overall balance, I should say, or the sustainability is to limit down the risk. I mean, the risk as in terms of, for example, the volatility, the standard deviations, like ATR, whatever you kind of like risk measures attached to it. But some people actually more than not, more often than not, they seem to only focus on the reward side, versus forgetting completely the risk side, right? They seem to kind of like at times see virtually no risk in their positions. So that's where they get completely wrecked. So if you don't mind, like, do you have any sort of like, very recent story that some of your followers perhaps just brought into your comments or something like that, that they were just
I
extremely
mean,
upset because.
to be honest with me, I don't pay too much attention to what people say. I mean, whether it's a good environment, bad environment, people are gonna fuck up anyway. Let's be honest. A lot of the people we find on Twitter are just average Joes just coming on. You get some really good guys as well. With me, I mean, my main market isn't actually crypto. I actually come from traditional markets. It's mainly FX and futures. I trade stock index futures. That's my main market. Sometimes a bit of bonds. And that's what gives me a bit of edge in the crypto because coming in, I was expecting some risk off anyway. So we were
Mm,
bearish the e-minis. And that is what helped me with my crypto growing the account because there's that correlation there, no matter what people say. If it's risk off in traditional markets, it's going to be risk off in crypto. So that sort of gave me a heads up. Okay, if that's the case, if I'm right, it doesn't have, I might be wrong. So that's where my first thing I think about. Okay, where's my risk? Where my invalidations? But so that's sort of I know how much I'm going to lose. But if I'm correct, the profit margin is big because
mm,
the kind of move I'm expecting is going to be significant, and we caught that kind of move. That's why I posted a lot of ES stuff, quite a few significant swing trades. So mainly, what I'm doing my ES, you can sort of see what I'm doing with my Bitcoin trades as well, or Ethereum or whatever.
mm.
So yeah, I just always first thing I look at is where's my invalidation, where am I wrong before even looking at reward, and then I'll see is it worth my risk to reward or not.
Mm.
And
How
I
do you define, by the way, some in the middle of the line? How do you define the risk? Sorry, the invalidation kind of like triggers. To just out of curiosity before we move on to the
where
charts.
I'm wrong in the market, where do I believe? What is my cutoff point where actually if it goes
But
above
is
this
is it
level,
some
there
sort
might
of
be
like a
some.
fixed percentage? Is it like a fixed
No,
percentage
just
margin or
certain
something like that?
price levels in the market. For me, I mean, from a pure PA point of view, not a fixed percentage. It could be a great percent. It
Mm,
could be like we've dropped massively already, and am I still bearish? Well, technically yes, but it could still bounce a significant amount before my invalidation.
mm.
If that makes sense. I can probably show it in a chart if that
Gotcha,
helped. But yeah,
gotcha.
I have a fixed area or level. Okay, above this here, then I'm completely wrong on the idea. Coupled with the fact, that, okay, is it fundamentally lining up or not?
Mm,
But just to make it easier for people to understand a certain price point, okay, if it's above that, then I'm wrong. So if I know I'm wrong, if it's near there, then it's a good risk to reward. Or from there, if there's new invalidations formed.
mhm.
So that's
So
how
does
I.
it? Yeah, yeah. I mean, I got you. I got you. Perhaps to picture it, right? To refer back to what you said about you would have potentially kind of like little, only a few kind of like big runners that compensate for the potential small
Yeah,
losses that you take, right, on the way.
yeah,
So is it because of this specific kind of like a price level that, for example, that you set the specific price point that you know how it works in futures. There's often some liquidity grabs, right? There are bull traps, bear traps. Doesn't Do you kind of like just set a specific stop loss out there,
yeah. I mean,
or you
I
kind of
don't.
like let the candle close and then you decide?
No, I just like, for example's sake, I can have a level of resistance, for example, to just make it easier for everybody to understand.
Mm,
And then just because it breaks that level once does not mean I'm wrong. I want to see like does it reclaim that level and just hold it? Because sometimes you can get those deviations. I have a normally when I trade, I use to stop just as a safety measure. Sometimes it can squeeze me a bit more. This is where with Bitcoin, I personally would advise people doing that, but it's just within my risk tolerance. I use a wider stop and I play
mm,
around that position. Reason why Bitcoin is very volatile. It can
mm,
squeeze up and back down straight away. So in traditional markets, it's more structured, I'd say orderly, and I can use a tighter one with Bitcoin. I find personally with my own trade, maybe it's better. Others are much better than me that can do it better, but I need a wider stop the way I
mm.
play. But then I average in and scale in and scale out of the position. But it's just a if zone where if it cleanly breaks above and holds above that level, I'm completely wrong, and vice versa. If I'm looking for lungs, just an area where this cannot be breached cleanly, otherwise my thesis is wrong.
Gotcha,
Yeah,
gotcha, gotcha. Yeah, this is
I
this
prefer
is
to live in a
completely
gray
fair
area,
point.
not black and white. It has to do
uh
X, Y, Z. It's a gray area, and that's where
mm.
I work within.
True, 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 true. It's actually, it's always very hard. Generally, like I think many people would find it overall, hard to decide about specific price points. Because why would you put, for instance, like Bitcoin is right now trading at 38,719, right? So let's say that they have an open trade running. So how do they decide which number is, perfectly better? for setting up their stop loss if it's 38, let's say 927 or 923, just for instance, right? Many people would struggle with it, but enough about trading for a very quick moment, because I want to touch upon something that is regarding the overall market structure, market trends, for 2022, with the months to come and the way you see it. So perhaps if you fancy opening some charts for the viewers, we could
Yeah.
talk about the 2022 and whether you see it for crypto and traditional markets more of bullish, bearish. Let's hear some thoughts and play the charts.
Is okay. You can see my chart, right? So,
Yes.
I mean, I always start with the yearly chart. So I just break it down on what I think, and that will probably answer your question. I mean, we're looking at the yearly chart. I personally think we probably take out last year's low. So I'm going to mark that out. Okay. And the reason behind that will be more apparent when I go to, when I zoom in a bit. So that's my ultimate target. As long as we stay above, I think, the yearly open, which is around here, we're within there. That's a long way to go. Things can obviously change. And the quarterly, we can see where things are still turning, and we're below the previous quarter low. So this is where I start refining it, and my invalidations come in. Where am I wrong? So I'll do that as quarter. So I won't draw too much levels, otherwise people get confused. So you can see that that previous quarter low is really holding that area. And as you can see, that previous yearly open or this year's open close, the yearly open or last year's close is really capping the market just from that yearly chart. And the lower time frame, you can see how significant that is. So as long as for me we stay below here, I'm looking for these clean lows here. And if I want to simplify it further, I think it makes sense if I just did this and say, well, it's a range play as well. Range high, range low. Well, that's a normal range play, wouldn't it? And it just makes sense for me to take out these, and then if it's going to go higher, deviate back above, and then we continue with the range play. And same with above, if it does that, like that. So for me, overall, I still see lower. Once this gets, if it gets taken out, I'm not saying it will, then I'll see how deep it goes, because we never know. I mean, could we push into here? I mean, this is just going to territories where unknown territories for me. But personally, I think if they're going to run these lows, it's not going to be little small. It's going to be quite significant. Maybe 25K, maybe 20K, who knows? And then once it reclaims, back up again, play the same thing. So for me, as long as we stay below here, I'm looking for here. Above here, then I'm happy to play back towards, hold above this area, back towards here. And range bound until proven otherwise. Obviously, clean break above here, then who knows how high we can go, 80K, 100K. We'll deal with that when the time comes. So I don't concern myself with what could happen, or, areas
Mhm.
where, it doesn't make sense to me to worry about stuff that's out of my control. But what I can focus on is what the market's telling me right now, and I believe towards the bottom, at
Mhm.
least 28K, 29K area, and then after that, you can do whatever you want.
Okay. Would it come then? Because we've touched upon already the fair point that the markets are correlated, right? That there is some sort of like strength correlation between the equities and between Bitcoin. For just a quick point for those who actually are not familiar. But while we're talking about the correlation, there are different sets of correlation kind of like measures. One of which is just if you run a linear regression, between annualized returns, of two different markets. Let's take S&P 500 and Bitcoin, right, against USD. And when you kind of like, have it diagrammed with and run the linear regression over it, you can come up with an r square coefficient, for instance, that tells you about the overall approximation and kind of like adjustment, whether there's some sort of like linearity in that. Simple words means that Bitcoin over the last couple of months has seen strengthening correlation, to the equity markets. If you take the S&P 500 as a main measure for the large cap index, and this is a subject to change. These markets, keep kind of like breathing and pausing, this, inhaling, exhaling, shrinking, expanding, and so on. And you see this correlation change. So back to TraderSZ, knowing that the correlation changes, this is not kind of like a static thing. Do you have any set of rules, let's say, for watching the Bitcoin chart? Do you firstly go to S&P or SP
No,
minis, just like you
I
said?
keep it a lot simpler than that. All these numbers and stuff, it sounds nice, but I keep it much more simpler than that. See, the reason a lot of the time I find we have these decoupling, people call it,
Uh,
short term, is because, okay, if the ES is range bound, then it's not trending. So if it's not trending, then correlated market can often do their own thing. For example, say in FX, just say the dollar index, when that's trending, all the FX majors usually, unless there's some big massive fundamental factor affecting it, like a war or this, that, the other. But in general, if the dollar index is trending up, the FX majors will trend down against it, like the sterling against the dollar, euro against the dollar. Now, if the dollar index is in a range bound, then those card pairs they can do their own thing then. And I find similar with sometimes with Bitcoin. So if I overlay this, usually, I mean, this is how I do it. I don't look at the. I mean, I'm not that long term either. I play long term, but I'm in between, where it's kind of obvious for me. I can see the general correlation. It won't affect. I don't expect it to be tick to tick, but if generally it's there. And a lot of the time, you find the decoupling. People like to call it is if the ES is range bound, it's not really going anywhere. Then certain markets can like Bitcoin can like squeeze higher, and people say, "Oh, that's the cup." No, it hasn't, because it eventually gets snapped back down. Then once the market is ready to make its directional move, then everything comes back into play. Then, so that's an important factor. When it does deviate a bit from each other, what's the reason? Well, it's usually because it's range bound or there's some short term driver, but eventually it just gets snapped back down, and the overall flow continues. That's as simple as I keep it. That's it. Is the
Okay.
correlation? Yes, it's obvious, and that's it.
Okay, got you. I mean, this is completely fair approach. Like, of course, the overall point of whether it's some sort of like a simple linear regression, whatever person's correlation thing, all the maths behind it actually should lead you always to very simple conclusions, right? Basically, well, in terms of trading, whether it's
Like,
a
I've got a
buy or
maths degree, so I
sell.
understand. I understand all of that stuff because I've done a maths degree myself. So, and sometimes these words can get overcomplicated, and sometimes these
Yeah.
concepts can overcomplicate trading styles. I've sort of removed that terminology and stuff, and say, okay, what's the market telling me right now? And if I identify there's a breaking correction or there's about to be, then I understand. This is where I step off, put my foot off the gas, because I know something's going to happen now. Where I
Mhm.
find at times, okay, Bitcoin consolidating, and for example here, I'll show you an example here. This is where I wasn't happy with Bitcoin. This kind of structure here, I knew, okay, ES is still heavy, but this looks like it's going to it's going to decouple for a couple of hours. It's going to swipe, and
Mhm.
usually if I'm right, it's going to snap back down. What does it do? Snap back up and then immediately back down. And that was a short-term decoupling, but that's because ES wasn't doing nothing. It's okay
Mhm.
to deviate. It's just a liquidity on a stop run. Everybody out, and then what does he do? Resumes. So once the stop runs are done, so you know, that's why I think confuses people, knowing when to expect it. And I expect it's environments like this where Bitcoin still is range bound, short term,
Mhm.
but I'm leaning lower for obvious reasons. That's when I expect, okay, short term is going to break out, do its own thing, and these are the times it does it. That's why the weekend people say scam pumps. Why is that? Normal traditional markets are closed, so it can deviate. But once the futures opens, everything come back in line then, and
True.
those are the times where they can do that.
True. We're talking a little bit about the deviations. I think, that you overall see, a lot of, I should say, saturate. Market is very saturated with these deviations, especially when it's trading range bound, right? This is what I've
Yeah.
noticed. That you see so many more traps, so many more kind of like these deviations, fake breakouts, this snapback,
Yeah.
snap. When the market kind of like literally just pumps and then fakes or retraces the entire pump, or vice versa, the other way to the south.
Mhm.
Have you kind of like confirm it yourself? Do you also find it well, many more deviations of this kind like during the
That's
range
just
market, or is
this is
it?
just a normal range band behavior. Look at any market; it's the same thing. When it's range band, that's what it does. It just takes liquidity both sides of the market, and that's it. It's people that's getting frustrated are people holding for a swing trade. But other than that, you have to understand your environment. That's why when I was drawing the account, I understood we're going to enter a trending market. So that's when that strategy will work. That strategy will never work. But whatever I was using, the money management one in a range bound, and if it was, I gotta know how to handle that, because the swings I can catch are very minimal because we're in a range bound. Like here, if I look at it, I mean this is the range I'm using, just to simplify it. Until we break out, and the longer your range is, the higher probability the breakout's going to be. And I personally, I'm looking at ES and I'm looking at European indices as well, just to give me an idea. And I think it's going to happen very, very soon. And I'll give a couple of reasons as to why I believe that's going to happen. This is my basic range, okay? There. And initially, when the range starting, you anticipate the big reactions. But now, see this. it's very shallow now. So I think it won't consolidate forever, but I think we're nearing a breakout phase. So the fact that this rally here has hardly been able to go to the top of the range there says to me, okay, it's kind of getting weak. Then I look for simple breakdown patterns, and that's when I start feeling, okay, maybe it's the trend continuation going to start. So I believe if this breaks phase one towards the bottom end of the range, but I think if this breaks, that's when we start trending again, and that's when the fireworks happen, in my opinion, unless the market screws me over. But risk reward wise, I mean, the potential is big. But even if you get invalidated and the breakout play for here, I mean, okay, take the hit. Market tells you it's not ready to you. Deviation, invalidation, back into the range. So I'm just seeing signs now that it's probably getting ready to break out. But again, I'm not going to say, you can't really say when. That's just, maybe that's my narrative speaking out. But I'm just,
Mhm.
from the chart alone and from what I'm seeing in the years, I think it's just a matter of time. And yeah, unless we go into that phase where we had a couple of years ago. Where was it? When it was down here, when it was the range of death, wasn't it? It was like, yeah, how
Yeah,
long did
yeah,
this
yeah.
go on for? Like, yeah.
Yeah, I
Unless we
know.
go to that phase, then okay, then I'd leave it alone, go to something else.
Yeah, 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 yeah. You know what I'm finding interesting, to be honest, personally in my end. Like, first of all, that one chart can actually just have 1,000 opinions of different people, right?
Yeah,
Many people would see completely different things about one single chart. Not saying I see differently. I'm just saying overall. But secondly, what I think is kind of like odd to me, since the 2021 kind of like kicked off with this overall like choppy environment, right? We keep swinging between the floor of the range somewhere 2800 28,000 30,000, if you will, all the way up to 65 70s, also, if you will. So this is kind of like low momentum movement, the way I see it, right? uh,
yeah,
and but it's still like, just if you kind of like put it on the line chart, or even if you leave it on the candlesticks, you still see this ascending sequence, right? This ascending sequence of highs and lows. So this technically marks it on the map as a trend, as an upwards trend, right? It
yeah.
doesn't seem to be kind of like a bear market to me, to be honest, right? It feels like it definitely feels like the hell of it, because so many people would just fight 24/7, and somewhere about whatever you and I post, let's say. But the sentiment is completely there, like as if it was a complete depth, that the depths of the bear market, but the market keeps ascending. This is what I'm finding very kind of like odd to me. Like, have you got any thoughts on that, maybe?
But the thing is, right? I mean, what is a bullish market and what is a bearish market? You gotta ask yourself. Okay, if you're looking at it from this perspective, which kind of people look at it from here and see as a range and they're okay to hold on to that? It's not mainly the normal person. It's gonna be the big player, and even the big players are hedged either within here or shorting. You know, so even if we are gonna, like, for example, Bitcoin here, even if you bought it here and you said, well, my long-term outlook is gonna be around here, no way are you holding that. You know what I mean? There you're screwed. But then, oh look, I told you so. When this happens, well, about it, no, that's, you see, this is where market was the stock indices will always go up, but you're gonna get blown out before that. So I think those terminologies confuse people. You got to be a sophisticated long-term investor to say, yes, I'm going to buy this here, but I have a valuation of such high prices that I will scale in. I have my method of getting in. You know, whether it's scaling in, or even if I do get in, I'm hedged or whatever. There's many ways of doing it. But the normal retail PA trader, those terms mean nothing. Let's be honest. I mean, they just want a number go up only just for 10x purposes. They don't really care about the tech. Okay, nobody. I don't. I'm not gonna lie to you. I don't.
Me
I'm just
neither.
here to speculate. I mean, I love bearish environments because it's fast money. But
Yeah.
yeah, I mean, but yes, from your point of view, there. I mean, I do see this as a range. I still believe it's a range. Now, if it does break range, look, this is just a range. Okay, I completely agree, and I would anticipate the bullishness to continue after, however low it spikes. I'll
Mm,
let it do its thing, but the moment it gets back within, then it's back towards
mm,
here. And then if it does that again, I'm going to be wary. That's at range highs. Until it breaks out cleanly below here, then we break out the trend. But till then, macro view, very, very bullish, obviously. But crypto's changed, hasn't it? I mean, before it was just Bitcoin. Now it's like more of the institutions coming in. It's trades like a risk asset now. The days
yeah.
of 1,000x are gone now. It's early adopters and those that go in like sub 100. It was different then. There was no institutional or stuff like that. So it can do those kind of moves. But the moment more players come in, bigger players come in, well, it's going to have more order to it. And with that order comes, is it really going to do moves like that? I think it'll go to 100k, 150k, but it'll be capped. I don't think it'll go to those extraordinary numbers people come out with. But I could be wrong. And even if I am wrong, I don't care. I'm trading it anyway, up and down.
Yeah,
So what does it matter? I'm not
I
really
love
a,
it.
a hodler of sorts. Yeah.
I love it. I love the simplicity. When I see actually, just some of your tweets, or posts on there, on Twitter, I usually find it very kind of like soothing that so many people find your commentary, your market thoughts, very simple, right? There's like, just like you're saying, you're trying to simplify. There's, in terms of like not really thinking in terms of the bull markets, bear markets. You're just trading the actual, well, chart setups, if you will, not really putting too much focus on defining the market. I find it personally very interesting, and well, that's a little bit, different to what I'm doing. But frankly speaking, like, whatever people do there, just basically for the trades. I know people who, like, they would have just an intuition, right?
Mhm.
I spoke to Rookie XBD some time ago, and like, you know it well, most likely too, that he just got so this brilliant intuition. He didn't really dedicate himself much to this, decrypting this overall, deciphering, this overall market definition, like whether it's a bull, bear. He just kind of like felt like pressing the green button, and he did it beautifully, right?
It's often like there is some sort of skill behind. Obviously, he's identified he's in a bull market. So in a
Yeah.
bull market, even if you are off a bit with your entry, when you're correct on the trend, it'll come back in your favor anyway. So obviously,
Mm,
he'll have a cutoff point, but probabilities are in your favor for longing, and
true.
probabilities is, in a trending market. That's absolutely correct. So
True.
yeah, I think we try to overcomplicate things. I was like that. It took me ages to like hang on a minute. You take a full circle, start off simple, and then you overcomplicate all this complicated bullshit jargon. You feel like you're doing it, but you're not making money. And then you take a full U-turn and say, okay, yeah, just
Mhm.
keep it simple. There's my level. There's my invalidation. Smack it long, smack it short. There's my target, and I'm done. And that's what I do. That's what I do.
Okay,
Literally,
this
the
sounds
rest of
good.
the day posting on Twitter. That's it.
Yeah, yeah. So now to everybody listening, just go and do your magic, and you're going to be like TraderSZ one day. As simple as that. 5 points, 5 steps. I love it. I love it. Listen, let's take it back very quick to the legacy markets, maybe, right? If you have some charts to share, and your thoughts, perhaps commentary over it, for the you said, ES minis, right?
Yeah, we can go to the ES. I mean, I think I'm more focused on European equities now. I think they'll
Uh,
get hit harder.
feel free to play the European equities if you
I
like
mean,
to.
I'm still bearish the US ones, but I think they'll get hit at the end. The more focus on the European ones, at the DAX and the Euro stocks.
Mhm.
But I mean, I've been bearish since. Yeah, I even called it here, 47.17. If you look at my Twitter, I'm still leaning lower. How low I don't know, but I do get an idea. But this is where the technicals come in, don't they? As to where they go. I mean, I'll break it out simply, and then I'm going to go on the DAX. I think DAX is one of the more favorable ones. I believe it gets you into the four figures again, and I do believe Europe's fucked. Oil up, euro down.
Sounds
Yeah,
like a
so
recession coming up, right?
yeah, I mean we're more or less pivoted off of the mid range of last year, so that's always a pivotal point for a pause, profit taking. Some news coming out next, but I think around here anyway. I personally think the next objectives are going to be towards here. So I'll just play my levels even with that in mind, and then ultimately here could we spike towards that? I think it's very possible. Nobody thought this could happen, but it did. I think we're in a time where I think a lot of things can happen. But personally, what I'm going to keep it simple, and this is how simple I'm going to do it. Um, um, if we get below this trend line here, I believe that's the next play. So I've got out most of my. Actually, this is where I got out my shorts. I've got even got on Twitter when I got out my shorts. This I've just been roller coasting around day trading. But I think the next breakdown, because it's been consolidated so much, leads towards there. If it breaks and holds below there, then that's it. That's what I'm doing. If it breaks above, I mean, this is where my line is done. Where we talked about bull bear market. I think if it breaks above here completely, then I think we probably push to new highs. But yeah, so I'm waiting for the breakdown to confirm for me. But the market that I really like or interesting is probably the DAX. So if I go to the DAX now,
Mhm.
this is where I think shit. This looks cooked to me, and especially what's going on in Europe. I think we're probably gonna go through a big recession in Europe. The way
Mhm.
things are looking. And it looks scary. It looks scary for Europe, in my opinion. But if I look at this from this perspective, we are trading below last year's low, where we're fiddling around there anyway, and this is going to be very, very important for us, because this is what I think personally determines how low we go. Actually, got another chart. One second, let me just bring one other chart. I've done it also just to save time, and um, FX here just makes more sense. Yeah. So we got 2021 low. I personally think this is where the basic trend lines come in. I used to take the piss out of basic trend lines, but I use them so much now. It just gives
Mm.
you, once you got the context right, it just, any technical thing you use, it sort of makes it just makes more sense then. So around here, I'd say, I don't know, something like that. Um, I think we're filling this gap here. So obviously this is a natural bounce, it's a bear market bounce. We get them. I think once we can get back below the 2021 low, the significant thing about this trend line for me is the fact that it's below a yearly level. So even if you look to the left of this, and this is scary thought. I mean, looking at this, I mean, below these highs, this could end up being a big deviation, right?
Mm.
And the moment we get back below there, I think this we go to around, I don't know, whatever that number is.
Yeah, that would be a murder.
Yeah,
That
about
would be a murder.
10K, 9800 area, maybe even lower. Who knows? But I just go for easy targets, and it's also I'm an equal measured move from there towards there, from there towards there. So
Hmm.
I'm waiting now. It's key. It's a make or break point. So there's gonna be a lot of profit taking here, unwinding of positions. But once we break below here, I think it's game over towards here.
Wow,
So outlook
nice.
was grim. Obviously, eventually things will resolve and the world will move on. And this is just a cycle the world goes through. And this is what I said, in the long term, it will always go up. Each spike down you've seen in the market, there's always some reason why it happened. It makes new highs. It's just a natural cycle of the market.
Mm.
But yeah, I'm looking lower, and same with most indices. I'm leaning lower until proven otherwise.
Yeah. Then
So that
people.
that, that overlays onto my Bitcoin outlook as well. I mean, if the world around us is burning down, the fuck's Bitcoin gonna do? What number go up?
Mm,
But yeah.
mm. Yeah, then you open up, to the people asking questions like, how could government let that happen, right? If it just
Well,
dives nose dives like that, that would be wild. Yeah, listen, I mean, do you have anything for us in store for the FX part? What kind of like currencies you're looking at?
FX, but you know what? FX, I've been getting screwed on. I mean, I'm in a dollar CAD long, and I'm getting screwed on that. But I think Euro USD. If you have a look at that,
That's a main pair, right?
sorry.
That's your main pair. That's what you mean in trading
No, I
for the
mean I look at the
forex.
most G10 pairs. I look at Euro. It varies. Euro USD, GBP USD. I stick to FX majors, and if I believe there's something going on with the BOJ, I'll go to the crosses or risk on, risk off. This year's been a bit different, even if you have risk off. But again, this is where the FA comes in, where purely on this is where I messed up as well, thinking oil going up. I mean, that was a different. There's different drivers cause breaks in correlations. Like Aussie didn't go down, but then you
True.
got to realize. I mean, was there something to do with Russia? And I can't remember which material. I'm not the greatest of FA, but all I know is for that reason, um, the Aussie dollar did go down, which I was expecting it to go down. But bigger picture, I think we're coming to a key pivotal point now. Um, here now, this is where I think does the ECB step in or not? But if they don't, I mean, there's no reason why we can't see these areas here. To be honest with you, I'm sort of. I think we do retest this area here, but after this, it's going to determine if it's going to be a fake out towards here, and we'll go back up, or it's going to be a breakout. So, I think we take out around this area. Then then towards it, that's going to be a scary thought. What happens here? And if oil still continues going up, fucking lower euro, higher oil. Damn man, what's going to happen? People can't afford. It's a scary thought. It's a scary thought.
Yeah.
They're gonna.
Yeah, it's scary. It's scary.
Yeah. So yep. So overall, I mean, and one more chart probably would have been sensible. To just look at the
Mm,
dollar index. That's gonna really dictate everything else,
true.
more stuff. And I personally think this is not done yet. I was bullish dollar from around here, these lows here. And it took its time, but I think but if things continue the way they are, I think I don't know, maybe here, maybe 100
You,
plus.
you think so? 100?
I mean, until I'm proven wrong, resistance becomes support. Resistance becomes support. Why change? You know. until the
Mm,
market
mm,
suggests to me. I think there's a good chance, at least towards here. And then whether there's some sort of intervention here or not, I don't know. But I'll just keep playing it until I'm wrong. That's the way I play a trend. I'll keep milking it. And the moment I'm wrong, then okay, I'll take that one hit and I'll
mm.
change.
Got you, got you. Yeah, this sounds, to me as if you had really well defined this invalidation points, what I think many people actually, is missing in the trading game. So let's talk a couple of minutes about that very quick. So let's just like I said, those trade triggers, entry triggers, exit triggers. How do you define them? Because we've discussed basically that it's the price points more often than not. But do you have any other trade triggers for it?
Okay, so to keep it simple, the moment I have an invalidation, by default, I have a trigger because I know where I'm wrong. So I can enter any point in the market if I know where I'm wrong. And then the TA and the other stuff we look at, I think obviously because I'm not really fussed about precise entry because I scale in, scale out. It's more for I think scalpers and really short term. You need to get correct entry point. So I'll give you an example, right? So I think that's the best way to show it. So for example, take here. Let's focus on this area. This is a trade I took. I knew where this region here. This is where I'm wrong completely on the idea. Above here. So if I'm taking a short and hang on. So here he's a trade I took. Shorting here. So when price was around here shooting up into where am I wrong? I'm probably wrong above here. So
Hmm.
any if we trade anywhere here is fine for me because by default I know where I'm wrong there. And if I'm wrong stops me out, okay. At that point, that means most likely we're breaking out and I'm gonna start looking for longs. So I'm ready to hit that. Then this trade triggers based on okay, price confirming the breakdown. So I always start with invalidation. And then as price confirms and gives me a new one, I can add on to that. So for example's sake, another trade example. I'm trying to show easy examples because of the time. So here, I could have entered this. This is actually, if you look at my tweet, I did enter it here, knowing my invalidation was the area I showed already. And then this point, okay, Marcus confirmed to me is breaking down. The moment it got below here, okay, that's a breakdown then. So now my invalidation's gone from there towards there. And just in case market nuked to one candle, I've got some exposure. That exposure in the initial position based on invalidation can be, I don't know, small, whatever your risk management is. We won't go into that. But then there's more technical entry because it's market slam is breaking down. It sort of confirms my idea now. And then I start adding more. Where's my ultimate target? Well, until it's been hit, target one, and I think this was it. Around the weekly open, this low here. Once it got hit, I was out. Majority of my position then. So,
Yeah,
and then
that
as
that
the
was a
market
good
hit,
one.
that was the mark. As the market gives me new validation, so there was another entry. My validation was shifted there. So that's how I compound until my targets gets hit or I'm trailed out. If sometimes I do take the trail outs more often than not, but when one goes my way, that's all I need. That's a monster trade. That's how I grew the account. So I took many trail outs. All I need is one or two to go my way because imagine how much positions I've compounded while maintaining my risk. Obviously, it's a bit above normal risk, but still within my risk profile. And then that's it. Once it hits, that's a large chunk made. And I'll do the same
Gotcha.
again here. So similarly here. So once it, I don't know, once it does something like this. So right now it's kind of hard to see, but once I've got a new validation, I think I'm wrong above here then. So positions I've got, I'll try that, I'll add on, and ultimately I think I'd be surprised if they don't take out these those short term, but I think here and then here. But
Yeah.
again, I'm open to that because we're still range bound. It's hard to even going
Yeah.
below here. Is so tough. Once we get below here, then I'll start thinking of new validations. But if that
Gotcha.
makes sense, so my triggers, as soon as I know where I'm wrong, I've automatically got a trigger. As long as the risk reward is decent, and then furthermore, once it starts breaking down, then I've got more defined invalidation because then my idea is proven right or probability is proven right because market's breaking down, and then I can start going for more technical invalidations based on just
Yeah. I got you. I mean, to be honest, like I told you that before, actually, like somewhere on the site that I've always had, huge dose of respect for you because it does seem that this trading range bounds and overall, the shorting side is completely like victorious for you. You're such a pro trader in terms of like the range bounds. Personally, the range bound to me it's kind of like a no trade zone more often than not, right? So
Yeah,
so when I see you kind of like nail each and every single move out there, within the range bound, it tells me that you have a lot of this good, kind of like intuition on your side, that the winning chances also are again like are on, like, basically in your favors, right?
it's the
So
reason
I've
why. The
always had
reason why
huge
is because
respect.
with shorts, I understand the behavior better, and even in a bull market, I play the counter moves really well. I mean, I probably put more risk on those, but wouldn't put more risk, but I know the nature of it is going to be quick and short lived, and I get my profits quick. Whereas compared to the bullish markets, they're slower. So all I need is a handful of these moves like this, even in a bull market, and I've more or less made quite a bit because I put my risk up significantly. It's just because there's other reason behind it where I work and stuff, but I know I just understand bearish behavior really well. Panic against normal buying, and it's quick, it's short lived, it's fast.
Mm,
So months of hard work for bulls, boom, wiped out in one go, and I go for that wipe out move. I don't need many of them, but the ones I do catch, I make the most of it. I just understand the behavior properly. Some people are better than in bullish market. I'm okay. I can trade a bull trend, obviously, but I understand the behavior. I can see. I don't know, just years of experience. I know how he behaves, and if I'm right, I know how to maximize on that. But there's not many opportunities like that. But when they come, I make the most
true.
of it.
True, true, true. Okay, listen up. I mean, we are narrowing the very end of the show already. I do personally appreciate, the generosity of your time and wealth of
Thank you for
knowledge you've
having
already
me on.
shared. Yeah, and before we actually, just put a, call it a day for the show, I want to ask you to get this one final takeaway tip for the new traders that are coming into the market.
I would say look to understand the context of the market first. Even if you're a short-term trader, I think if you understand the context on where's more likely, or context in the sense where are we range bound or trending. I mean, if you're looking for scalps, even if it's trending, then it's probably like trending up. It's better to take scalps in that direction, in my opinion. But if it's a range bound market, then the probability of both sides working is higher. And be quick to cut losses. I'd say be comfortable with cutting losses and getting back in. Yeah, those
I
are the
love
biggest
it.
things. People let that losses run, and all the hard work is wiped out. So just be focused, disciplined. Work on your mental health outside of trading, because if you work on your mental health outside of trading, your decision making is right. But if your brain's foggy and you don't work on that, your decision making is going to be absolutely rubbish coming into the market, and the market is unforgivable.
True. True, true, true. It is. It is. It actually refers back, put us into reference to our last show where we did actually with Moss, we discussed, the overall mental health into the mental health importance, and how it can be attached, to trading overall. So, yeah, this has been, ladies and gentlemen, to everybody. This has been the final takeaway tip from my good friend, an amazing TraderSZ. And finally, where can people find more of your content, more of your information, more about
Just
you?
my Twitter at Trader1Z and my YouTube channel. Those are the main two things. So yeah,
Okay. Okay, I love it. I love it. Everybody, make sure you rush actually to go and follow at Trader1SC at Trader1SC on Twitter. He's been blowing up his account. 300, almost 380,000 people following him worldwide. This is huge, huge, huge victory. It's a rock star of trading, my good friend. And yeah, huge respect, buddy, to you. Thanks so much for coming over. This has been
thank you
a
for having me
blast.
on. Thank you.
Thanks so much. Cheers. On to the next one, guys.